The Japanese economy marked its sixth consecutive month of export growth in March 2025. This milestone is a testament to the resilience and adaptability of Japanese industries, which have navigated through a myriad of global challenges. This continued a trend of positive performance, a beacon of hope in uncertain times. The bustling markets and vibrant economic activities reflect a nation that is steadily regaining its economic momentum. Exports rose by 3.9% year-on-year, according to data released by Japan's Ministry of Finance. This growth, while modest compared to previous months, underscores the steady demand for Japanese goods on the global stage. While this was a slowdown from the robust 11.4% growth seen in February, it still represented a positive sign for the world's third-largest economy. The slight deceleration is seen as a natural adjustment following a period of rapid expansion. It still represented a positive sign for the world's third-largest economy. Analysts believe that this sustained growth is crucial for Japan as it seeks to solidify its economic recovery and maintain its competitive edge in the global market. The growth was driven by a confluence of factors, both domestic and international. Domestically, increased consumer spending and government stimulus measures played significant roles. Japanese businesses, known for their efficiency and innovation, have been pivotal in this growth. Their ability to adapt to changing market conditions and innovate has kept them at the forefront of global trade. They continue to find markets for their goods and services. From automobiles to electronics, Japanese products remain highly sought after worldwide, contributing significantly to the export figures. The global economic recovery, though uneven, also contributed to demand for Japanese exports. As other economies rebound, the interconnected nature of global trade means increased opportunities for Japanese exporters. However, beneath the surface of this positive data, there were signs of brewing trouble. Concerns about potential trade disputes, fluctuating currency rates, and geopolitical tensions could pose challenges in the coming months. While overall exports showed resilience, a closer look at the data revealed a tale of two trading partners. The dynamics of international trade are ever-changing, and Japan's recent trade data underscores this reality. Exports to the United States, Japan's largest export market, rose by 3.1%. This growth was particularly notable given the global economic uncertainties. This increase was driven in part by accelerated shipments of electronic parts and pharmaceuticals, as businesses sought to get ahead of potential trade barriers. Companies were keen to ensure their products reached American shores before any new tariffs could be imposed. The looming specter of new tariffs cast a long shadow on trade relations between the two economic giants. The uncertainty surrounding trade policies created a sense of urgency among exporters. In contrast, exports to China, Japan's second-largest trading partner, experienced a sharp decline of 4.8%. This downturn was a stark reminder of the fragility of global trade networks. This drop signaled a cooling of economic activity in China, which had been a major engine of global growth in recent years. The slowdown in Chinese demand had ripple effects across the region. The decline in exports to China was a cause for concern, as it suggested a broader slowdown in the region. Businesses and policymakers alike were left grappling with the implications of this shift, as they sought to navigate the uncertain waters of international trade. The positive export figures were overshadowed by a dramatic escalation in trade tensions between Japan and the United States. This sudden shift in the economic landscape caught many by surprise, as the two nations had long enjoyed a mutually beneficial trade relationship. In early April 2025, President Trump announced a new round of tariffs targeting Japanese imports. The announcement was made during a high-profile press conference, where President Trump emphasized the need to protect American industries and jobs from what he described as unfair trade practices. The move sent shockwaves through the global trading system and raised fears of a full-blown trade war between the two allies. Financial markets reacted almost immediately, with stock prices plummeting and traders scrambling to adjust their positions. The new tariffs included a 25% levy on all car and truck imports from Japan, a sector that is a cornerstone of Japan's economy. The automotive industry, which employs millions of people and contributes significantly to the country's GDP, was now facing an existential threat. This move threatened to cripple Japan's vital automotive industry. Factories faced potential shutdowns, and thousands of workers were at risk of losing their jobs. The uncertainty created a ripple effect, impacting not just the automotive sector, but also related industries and services. President Trump also threatened to impose a sweeping 24% tariff on all Japanese goods, a measure that would have far-reaching consequences for both economies. The initial announcement caused widespread panic among businesses and consumers alike. Though this was later reduced to a 10% baseline tariff, the damage had already been done. The additional 14% was suspended for 90 days, providing a temporary reprieve but leaving the door open for future escalations. With the additional 14% suspended for 90 days, businesses were left in a state of limbo, unsure of what the future held. Economists and analysts spent countless hours dissecting the potential impacts and advising companies on how to navigate the uncertain terrain. The tariffs were part of President Trump's America First trade policy, a cornerstone of his administration's economic strategy. This policy aimed to protect American jobs and reduce the trade deficit, but it also risked alienating key international partners. The goal was to create a more balanced trade environment that favored American workers and industries. However, the long-term effects of these tariffs on the global economy and international relations remain to be seen, leaving many to wonder if the benefits would outweigh the costs. The new tariffs injected a significant degree of uncertainty into the economic outlook for Japan. Businesses facing the prospect of higher costs and reduced access to the crucial U.S. market were left scrambling to assess the potential impact. The tariffs threatened to disrupt supply chains, increase prices for consumers, and dampen investment. The uncertainty was compounded by the ongoing trade talks between the United States and Japan. While both sides expressed a desire to reach a deal, the negotiations were complex and fraught with difficult issues. The Trump administration was demanding that Japan increase its defense spending, reduce its trade surplus with the United States, and open up its agricultural market. Section 5. The wages of tariffs. Economists warned that the tariffs, if implemented fully, could have a significant negative impact on the Japanese economy. They argued that the tariffs would likely lead to higher prices for consumers, reduced exports and job losses, particularly in export-oriented industries. The tariffs also risked derailing Japan's fragile economic recovery. The automotive industry, a cornerstone of the Japanese economy, was particularly vulnerable to the tariffs. Japanese carmakers, already facing intense competition from American and other foreign rivals, were bracing for a significant hit to their sales and profits. The tariffs threatened to disrupt the industry's complex supply chains, which relied heavily on components sourced from both Japan and the United States. Section 6. A central bank on guard. The Bank of Japan, the country's central bank, was closely monitoring the situation and signaled its readiness to act if necessary. The bank was particularly concerned about the potential impact of the tariffs on inflation and economic growth. The bank had a range of monetary policy tools at its disposal, including interest rate cuts and asset purchases to support the economy if needed. However, the bank was also wary of depleting its already limited policy ammunition too quickly. The bank had been pursuing an aggressive monetary easing policy for several years, with limited success in boosting inflation to its 2% target. The bank was also concerned about the potential side effects of prolonged monetary easing, such as financial instability. Section 7. Market jitters. The announcement of the tariffs sent shockwaves through global financial markets. The Japanese yen, seen as a safe haven currency, strengthened against the US dollar, as investors sought refuge from the uncertainty. The Nikkei 225 index, Japan's benchmark stock market index, experienced significant volatility, reflecting investors' concerns about the potential impact of the tariffs on corporate profits. The iShares MSCI Japan ETF, a popular exchange-traded fund that tracked the performance of the Japanese stock market, also experienced a sharp decline in its share price. The ETF, which had been a popular choice for investors seeking exposure to the Japanese economy, was seen as a barometer of investor sentiment towards Japan. The decline in its share price reflected growing concerns about the outlook for Japanese equities. Section 8. Navigating the cross-currents. The trade tensions with the United States came at a delicate time for the Japanese economy. Japan was already grappling with a number of structural challenges, including a shrinking and aging population, low productivity growth, and a mountain of government debt. The tariffs added another layer of complexity to an already challenging economic environment. Despite the challenges, there were also some reasons for cautious optimism. The Japanese economy was fundamentally sound, with a highly skilled workforce, a strong manufacturing base, and a stable political system. Moreover, the government had implemented a number of structural reforms in recent years, aimed at boosting growth and competitiveness. Section 9. An uncertain horizon. The imposition of new tariffs by the United States cast a long shadow over the outlook for the Japanese economy. The tariffs threatened to disrupt trade flows, raise costs for businesses and consumers, and dampen investment. The uncertainty created by the tariffs risked undermining business confidence and slowing economic growth. The Japanese government faced the difficult task of navigating these choppy economic waters. It needed to find a way to protect its interests in the face of American pressure, while also preserving its vital economic relationship with the United States. The government also needed to continue to implement structural reforms to address its long-term economic challenges.